Hi, welcome to the CrossTech Compliance 2022 online conference. If this is the first session that you're joining us, welcome. If you were here yesterday, welcome one more time. My name is Ana Karina Gonzalez, and I am thrilled to welcome all of you to our second session, the business advice from compliance professionals and legal counsel. I am very pleased and very excited to be your host. And on behalf of everyone in the CrossTech Payments team, I welcome you and hope you enjoy today's agenda. Thank you very much to all of you for your attendance. And before we start this session, I would like to advise that it will be recorded and shared in our official channels for your review. Now, allow me to introduce our guest speaker and moderator. This session will be moderated by Marina Olman-Pal, shareholder of G&T Law. Marina advises foreign and U.S. financial institutions on a broad range of regulatory matters, including licensing, acquisitions, diversities, compliance with Bank Secrecy Act, laws and regulations, and compliance with Office of Foreign Assets Control, sanctions programs. Marina is going to be joined today by a great group of panelists. She's going to be joined by Joseph Ciccolo, founder and president of BitAML, Daniel Wood from Pillsbury, and Ross Delston, law office of Ross Delston. We deeply thank you, all of them, for participating in today's session. And now, the floor, it's now yours, Marina.
Thank you, Anna, and thank you to CrossTech, IMTC for this opportunity. It's an honor, as always, to be part of CrossTech and IMTC and to be a part of these important discussions. So today, what we wanted to touch on is, regulatory landscape, regulatory expectations, startups, where should we start? What are the things that we should keep in mind, et cetera. As many of you know, the regulatory landscape for fintech companies, including companies in the crypto space, continues to evolve very rapidly, more and more in the last year or so, and even in the last few months. There's been new laws, there's been new regulations, bills proposed at the federal, at the state level, all of which seem to be aiming at essentially creating, more clarity in terms of the regulatory framework for crypto companies, as to how they should be regulated, who should have oversight, whether licenses would be required, what are sort of the compliance issues. And we're seeing, concerns of ensuring compliance with BSA/AML requirements, consumer protection laws, cybersecurity, safety and soundness, et cetera. All of these things, are things that we should be keeping in mind, definitely in this space, especially as companies, continue to enter the space. Another item that is important that we have been seeing in the last few months is an increased attention and interest in enforcement in the space, as we're starting to see this, crypto winter, unfortunately, creep up on us. We think that more and more enforcement action will be seen in that space. In fact, the SEC recently announced that it was expanding its enforcement unit for crypto. So, all arrows essentially point to enhanced regulation, enhanced enforcement. And so these are items that need to be kept in mind. They're highly important. And with that, I'll turn to you, Joe. I know you often advise companies that are fintech companies in the crypto space. What sort of issues are you seeing? What guidance are you providing them?
Sure, yeah. So many of our clients approach us in the very early stages, and generally they're one of the first calls that they make when they decide to go into business, which is extremely flattering and humbling. At the same time, we have an opportunity to really get them up to speed and coach them on some of the high-level concepts and what to really be prepared for in terms of compliance. And we sort of start off at a high level. We talk to folks that are starting off with us or starting off in industry for that matter. Really what we call our big three, and that is register with FinCEN as a money transmitter, inquire about and obtain the proper state level money transmitter licenses if applicable. And that's a pretty big if applicable right now in the crypto space. And then the third of these sort of big three tenets is to have in place a written AML compliance program from day one of operations. And then sort of cascading under each of those three high level concepts, you'll find virtually, I won't say all, but virtually all of what you need to know in terms of compliance coming into this particular industry. State licensing is an interesting one. We get a lot of inquiries about that. That's much more of a legal interpretation, so I'll leave that to our other panelists. But what I mean by that at a high level is that in certain jurisdictions, certain states, you may not necessarily need a money transmitter license depending upon the unique facts and circumstances of your crypto business. Generally, that comes down to flow of funds and custody and other arrangements. Again, it's fact-based and based on the individual businesses. So we do get a lot of inquiries about that. And we are seeing, if we're asking about trends, more and more states going to what we might call a full license, meaning in the past, they might have had a no action exception or some sort of exception to the requirement to get a state license based on things like custodianship or making funds available at a later time at a later date, or other sort of differentiators in their fact pattern that may have caused the state at one point to consider that not to be money transmission. But fast forward to today, and you mentioned it, Marina, we're seeing a lot more participants in the crypto space, a lot more capital flowing in, and certainly with that, a lot more regulatory attention. And now that regulators have really can understand and really wrap their heads around this monster that is the crypto space, they brought with that the resources and now have the understanding and are up to speed and have moved towards more of a full license in their jurisdictions.
Yeah, no, that's absolutely true. And that's a great point. And let me ask you, Joe, because we get this question all the time, and I wanted to get your thoughts, from your perspective and your experience. When you are in the licensing process with regulators, what does that process sort of look like? How difficult is it? How burdensome is it? And how long does it take?
Sure. Yeah, I think it's important to bear in mind that it's most likely going to be measured in months, and in some cases, in some states that will remain nameless, years to apply for and obtain a state level money transmitter license. So the process is very much back and forth. So I think many of you are probably already familiar with registering with FinCEN, and it seems like a very straightforward exercise. You're filling out some high level business information and submitting a form, and then wouldn't you know it, within 7 to 10 business days, generally speaking, you receive back your registration number. You've registered, you're on their rolls, and you now have that piece of information that confirms that you're registered. At state level, it's permission based. So you have to get the state's permission to operate in that jurisdiction. And so what that means is going through that licensing process, you're submitting copies of your AML compliance program, other supporting policies and procedures, whether that's cybersecurity, disaster recovery, consumer protection, proof of bonding, maybe even background checks and fingerprints. So there's a lot of information to be sent in. And as you might imagine, there are opportunities where there may be misinterpretations, or perhaps there's something extra that they want to follow up on, a little thread they want to pull on based on the information you sent in. So all that to say, there's going to be a lot of back and forth, and there may be some radio silence for different periods of time, but ultimately, because there's humans on either end of that transaction, let's call it, there is going to be some time associated with that. So we're very, very clear with our clients that this is going to be something that they're going to have to be very patient, very, very, very deliberate in their engagement, and ultimately see it through to the end, and be as thoughtful and as compliant, obviously, with each request and each engagement.
No, yeah, that's great. And it's the same thing we're seeing also on our side. It's, in the timing, which is the question that we always get, it really varies, right, from state to state. Some states are incredibly quick and helpful and responsive. Mm-hmm. Others go radio silent, and it's hard to get information from them. The process is much longer, or they just have a good number of follow-up questions, and it's just a burdensome process. So you really, it just varies, with the state that you're looking at the time. And then I also think that with COVID having taken place, that definitely impacted staffing and licensing process. So yeah, we've definitely seen that. And so you mentioned, as you were discussing the licensing, you mentioned, sort of the critical policies, procedures. I know you work mostly on AML policies. but there are other considerations and other compliance policies that should be in place. Can you discuss those?
Sure. I'd say maybe the two critical, sort of areas of the risk management spectrum in terms of policies and procedures, to my mind and to my observation, would be consumer protection and cybersecurity. And I can kind of elaborate on both of those just a little bit. So cybersecurity, I think we all sort of read the headlines of the Colonial Pipeline and the ransomware, for shutting down basically part of our infrastructure as a country. Really grabbed the attention if it hadn't already been there in the financial services space and the general public in terms of the implications of these cybersecurity incidents. And I think that's elevated the conversation, certainly at the federal level, but as well at the state level. And so a lot of these state level money transmitter regulatory authorities have stepped up their requirements and expectations beyond simply sharing your policy and having a few words about that, but really wanting to see what systems controls you have in place and really elevating their regulatory requirements and compliance best practices. On the other side, consumer protection, that's a really big point of emphasis, both at the federal level, and we could talk about the CFPB getting back into the frame in terms of looking at fintech and in particular crypto related businesses as well. But we're also seeing that the state, I'm here in California, near the state capital of Sacramento, and there's a point of emphasis for sure as it comes to consumer protection. We have a lot of new entrances into the crypto space. There's a lot of consumers that either don't know too much about crypto or maybe think they know a little bit more than they do. And really working with our clients to say, okay, not just putting a policy in place, but let's have direct disclosures. Let's put on our website, what are the fees? What exchange are you quoting in terms of the price? How do you cite that? Do you have an avenue for redress? Meaning if your clients or your customers are disappointed in the product or service, or they have a complaint or even a general inquiry, how are you going to be able to support that? Is it going to be a support ticket and an email box that gets overfilled, or do you have a call center, or do you have some other omni-channel presence that you can interact with these consumers directly? And oftentimes what we find is some of the complaints, through FOIAs and other interactions with regulators and state government, often these complaints are very sort of mild in terms of sort of looking at that and saying, hey, a quick phone call or a quick conversation would have cleared this up. Very rudimentary sort of information about how crypto transactions work, or wallets, or what needed to be done in order to accomplish a transaction could have been cleared up with maybe a phone call measured in a few minutes. And so in some cases, that having that great quality customer service, that great support, and that opportunity to engage consumers, whether they're happy or not with your product or service, is really critical, and it can alleviate a lot of concerns for the consumer, number one. And number two, it really shows your regulators that you are dialed in, you know your customers, you can engage them, and you have a safe environment where you can offer your products and services.
No, that's
If I
great.
could jump
How
in,
about- yeah, go ahead.
I just want to
Dan.
piggyback on that for a second, and say that having been a regulator at one point, a good portion of the enforcement actions started from consumer complaints, right? About half and half, roughly, between competitors ratting you out for not being licensed and half from consumer complaints. And so, what you're saying, I think, resonates with me. And if I can bring this around to like the title of our session today, like the business advice I would give is take care of your customers. Like, there is no such thing as too small a consumer complaint, because if it gets away from you, it can lead to regulatory risk you do not want to deal with.
Yeah, no, that's absolutely true. And let me ask you, Joe, with respect to cybersecurity policy, I mean, that's an item that is of increased attention these days. What do you recommend in terms of policies and procedures for cybersecurity?
Yeah, so our specialist, we sort of sat down and thought about this. Okay, there's sort of these evolving expectations, and there's all these different states, and we sort of started and said, hey, what's the highest bar? And that's New York with the BIT license. We said, okay, why don't we take what they're requiring and make that what an institution would use across the board? And if anything comes out that supersedes that, or any best practices from the federal level or from any of the other states for that matter, let's strive to incorporate that. And then further down that cybersecurity rabbit hole, if you will, getting into pen testing and other sort of engagements from outside professionals, they're kicking the tires, so to speak, and making sure not only do you have a sound policy and practices, but we can put that to the test. right? Because you would rather test it in a controlled environment with friendly faces, as opposed to, of course, illicit actors, and of course, as opposed to examiners and regulators coming in, at which point it's already too late. So we're really impressing that upon our clients, and I think that that's a very easy sell because no crypto exchange or crypto platform wants to be splashed across the headlines as being hacked, and of course that has a cascading effect in terms of reputation. And if you can't be relied upon to hold or custody other people's funds, customers aren't going to give you their funds to hold on to. So I think we're seeing a lot of heavy investment from crypto exchanges in particular, and other crypto companies, don't get me wrong, that are investing a lot of resources and time and attention to this critical element of risk management.
Yeah, no, definitely. And so in crypto, as you know, there's a number of companies that, crypto is constantly evolving. There's innovation. It's never-ending innovation, which is the beauty of the space. And so regulators are constantly trying to catch up. As you mentioned, there's more and more staffing being dedicated to try to understand crypto and different models, et cetera. There's a number of companies that, especially in the startup world, that are just in this sort of gray area in terms of, well, for my model, there's really no guidance from regulators. So I'm not sure whether registration requirements apply, what sort of AML requirements apply, et cetera. What advice do you have for companies in this situation?
Yeah, I think that's a great question. So the first sort of step I would take, in engaging clients in this topic is to instruct them to begin with the assumption that you are required to have an AML program. And then from that, instill upon them that good compliance is good business. So in many cases, a lot of our clients are going to end up being ahead of the curve, and that's okay. The difficulty we have in some of these conversations is the sort of schoolyard retort, well, that company is not doing it, or my competitors aren't, and I'm going to lose some business. And we impress upon them it's very hard to run a business from a jail cell, but we also say, hey, look, would you rather do the AML compliance program, vendors, onboarding? Would you rather do that on your timetable, or would you rather do it on the regulators, examiners, and government's timetable? And I'm pretty sure you'd rather do it on your timetable, setting it up early, making those investments, and growing with your compliance. And it is difficult, some of the nuances of the different business models, but very, very high level, and I'll leave this to our legal experts on the panel, as I'm not a lawyer. But anytime you're dealing with money, especially other people's money, you have to assume from the beginning that there is some sort of regulatory compliance, AML and beyond from that.
Yeah, no, absolutely. And let me ask you, in terms of banking relationships, so trying to get a banking partner, a bank account as a crypto company is not easy, as you know, and establishing a long-term relationship with a banking partner is always a challenge, as things constantly change, and banks are also trying to understand the space as well. What are you seeing in that space, and what advice do you have for companies that are here in our webinar today?
Yeah, we get the banking question a lot, as you might imagine, and you're right, it's very difficult to get a banking account if you're in crypto. I'm told that it's actually easier if you're in licensed cannabis to get a bank account than it is to be in crypto. One of those is illegal under federal law, the other is not, but I'll put that aside for the moment. We talk to our clients, we say, look, you really have to do your research, find those handful, and it's quite literally a handful of banks that are crypto friendly, and engage them super early on in the conversation. We may be working on the early stages of writing their compliance program, for example. We say, look, reach out to the bank, have a discovery call, get to know what their expectations are, get their application, because it's going to be very unique and it's going to be very cumbersome, because you're a crypto financial institution, you pose a higher degree of risk, and therefore there's going to be more mitigating controls. So grab that application early on, start going through it, start gathering those pieces of information, and really just get off to a great start and make that first impression with that bank, and understand that it's going to be measured in months to onboard with a bank as a crypto company. And that's a reality that's a little difficult for some of the startups, who are saying, hey, I have a limited sort of runway with capital and the team, and I really need to get going on that. But staying in it, through the long haul, engaging the questions back and forth during the onboarding process is super critical, and really come to the table with your best, I don't want to say best and final, but your best effort in terms of all the documentation and questions that they require, because they're more likely, I think it's just human nature, they're more likely to look at the application that is 85 to 90% there than they are to an application that's maybe 10 or 15% complete. It's a human nature. They're gonna gravitate towards an account that's close, and so you want to put yourself in that best possible position. But yeah, it is very difficult to find a crypto bank account. I wish there was a solution, to more banks participating. But I'm hopeful that more knowledge about crypto and certainly more information and typologies that have emerged through the private sector and through the great efforts of FinCEN to put out some amazing, red flags and points of emphasis on elder abuse, for example, and cybersecurity and other areas have really sort of opened people's eyes to more of the acute realities of the different risks in crypto, as opposed to the sort of monolithic view that crypto is somehow inherently bad and evil. But rather taking a step back and saying, hey, what are the real risks, and how can we, as a depository institution, accept those risks, or how can we mitigate those risks rather, to be able to accept and onboard crypto clients? And of course, that's a decision for each bank to make. And I'm hopeful that with time, we'll see more depository institutions take up that mantle and onboard crypto-related products, services, and companies.
Yeah, no, agreed. And I think also for crypto companies, it's critical when they're approaching a bank to sort of have this mindset that they're essentially going to be educating the bank on the industry, on their model, and just be very patient. See yourself essentially as a professor, so that because the bank does need to get comfort, that it knows, the company, what kind of transactions are going to be flowing through the bank, and that the appropriate controls are in place, that are required by that crypto company. So there's going to be a lot of education in connection with the onboarding for sure. And I think also in connection with the relationship as it is, because as the bank continues to monitor that account and see transactions, there will be questions that will come up. And again, I think it's critical to make sure, companies are patient and they respond, as you said, Joe, as fully as possible to the information that's being requested.
Yeah.
No, great. And yeah, go ahead.
Oh, I was just gonna say that's a great point. Just to tag along, we try to impress upon those in the wider compliance circles that it's a two-way street. So when we talk to bankers, we say, look, I get it. You don't want to bank crypto right now. I fully respect that. I'm not here to change your mind, but I really think it's incumbent upon you to really understand the unique risks of crypto. So what I think you should do is reach out to some of the crypto companies in your area, or they may be part of different organizations that you're a part of as well, and do a lunch and learn, go out and visit them and get to know them and talk about their product or services. People in the crypto space love to talk about crypto. So you're delighting them. I mean, don't lead them on in terms of a bank account. We don't want to break any hearts, but at least open that up to a conversation and document it. So as a banker, when your examiners come in and talk to you and say, hey, what do you know about crypto? Oh, we don't bank crypto. That's okay. That's a bad answer. But if you were to kind of talk through it, say, well, we don't bank crypto right now, but funny enough, we just decided to go out there, put ourselves out there and gather some information. It's great to attend webinars such as this, but we just even beyond that, we wanted to go out and meet some of these companies, have a conversation and learn about their product and services. And we did so over lunch, and we talked about typologies and red flags. And regulators love that when different companies get together and talk about what they're seeing and collaborate and think through different controls and success stories they've had on the compliance side. So, and it's a great way to break the monotony and get out of the office now that folks are much more apt to leave their desk and go out and meet others.
No, absolutely.
I have a question for you, Joe. Do you, sorry, I don't want to take over your job, Marina, but I have on occasion recommended to clients that even if, sometimes they try really hard to not trigger licensure, right? But even if they're in that position where they don't have to register with FinCEN as an MSB, or they don't have to get a state license as a money transmitter, I generally tell them it's still a good idea to have a voluntary AML program, mm-hmm. right? And at a minimum, it helps your bank relationships. You're 100% more likely, in my opinion, to make the bank more comfortable to bank you if they see that, oh, you're not a licensed entity because you don't need to be, but you have a voluntary AML program with these controls in place. I'm just wondering if you're seeing that on your side, and if it's similar advice that you're giving out.
Yeah, absolutely. We work with clients all the time that don't per se fall into a designated regulatory bucket. I'll give you one great example. Work with a client, they do commercial real estate development. And you're like, well, AML, crypto, what's this all about? Well, they were going out and acquiring old data centers, and they were retrofitting them for exclusively for crypto mining operations, and they would rent those or sublease, whatever the arrangement was, out to these mining companies. And it wasn't like, one of us had a little mining rig we wanted to put in. These were big commercial companies. And they said, look, we just can't have anybody coming in here. We want to vet them. We do a whole background check, gather their name, information, copies of their driver's license. And on top of that, we want to do blockchain analytics on their wallet. What are they doing with this crypto? Is there anything that's out of pattern, anything that we should be worried about? And then they had basically a zero tolerance policy. If you do these things, you're out. We're canceling the lease and we're going to throw you out. Take your equipment and go home. And they really drew a very hard line on that. And it was very persuasive. And like you said, Dan, that the banks and other entities out there are asking questions. They hear crypto and they're, oh, what do you have? What are you doing? What are your controls? Wouldn't it be nice to have that voluntary, as you call it, AML program in place? And we've done that for several clients, NFT marketplaces as well. Those that are maybe doing different business models that involve NFTs in one form or fashion. We don't have time to get into all the different types of business models there, but taking that step forward and saying, hey, maybe not today, but I feel like there's some regulation or some regulatory expectation coming. I want to get out in front of that. And I know it sounds sort of catchy, or maybe it belongs in a bumper sticker, but good compliance is good business, and I really mean it. If you want to know and understand your customer, that's who you're going to be dealing with. Who do you want for your customer base? Right? Do you want a bunch of illicit actors or folks with bad intentions? No, you want to get to know your customers, be able to delight them with your products and services, and really work with people that you want to work with. And that becomes a very persuasive tool in our arsenal when we talk to clients about taking that step forward in front of their competitors in terms of getting out in front of regulation and having their compliance affairs in order.
Thank you, Joe. That was very, very helpful. I'm going to turn to Ross now for a few questions. Ross, I know you work very closely with crypto exchanges, right? And you've seen and you assist them, I understand, through essentially also set up, onboarding, expansion, etc. With respect to doing diligence on coins that will be sold through the exchange, partners, etc., what are you seeing? What are you recommending your clients within that space?
Really good question, Marina. Thank you. I'd like to go back to some of the points that Joe raised first, because that is the background to the answer to your question, which is there was a best-selling book a few years ago called Don't Sweat the Details. In this space, if you're talking about money transmitters, MSBs, money services businesses, cryptocurrency exchanges, you must sweat the details. So Joe talked about the requirement to get state licenses to register with FinCEN, but let me add a little oomph to that. There is a criminal law called 18 U.S.C. 1960 that states that if you don't register with FinCEN and you're an MSB, money service business, like a money transmitter, or you don't get a state license but do business in that state, you have committed a felony with up to 5 years imprisonment and a fine. And all they have to show is you didn't register. And does that happen? I'm an expert witness in a case right now where the only thing the person, the accused is charged with is failing to register. Often it's lumped in with other charges. So that's the first point. And yes, New York is the toughest, the BIT license is the toughest, but they're also, if you can meet their standards, you're in good shape. In terms of onboarding of counterparties like exchanges, maybe you're not onboarding them as a customer, maybe you're onboarding them as a counterparty. You have to know who they are because, again, my main work is as an expert witness when things go wrong. So I'm at the other end of what the three of you experience. There's a fraud and it involves an MSB or an exchange or a cryptocurrency exchange or a coin. and everybody's looking at it and saying, what did you know and when did you know it? And typically, no questions are asked. It's a coin, everybody's trading it, we accepted it. I mean, it's a weird, I can't name names, but even the name of this coin is strange. And you accepted that and lent money on it? And I mean, that doesn't make any sense. It's all after the fact. So you have to see who the exchange is. Bankers talk about too big to fail. Growing too fast is another red flag. If you're dealing with an exchange that's growing, and there's some that fall into this category by leaps and bounds, and well, that must mean that they're accepting customers without looking at them very closely. And that means that if they are a counterparty to a transfer of crypto to your exchange, you could be taking on legal liability that you don't expect. So you're not required to do due diligence on your counterparties, but it's a really good idea using a risk-based approach. The same would be true of any business, and this is a crypto business in particular, but it could apply to any business that is offering 20%, 30% returns on investment. You see a business like that that's a counterparty. If that's you offering these returns, my advice is simple: get a good lawyer. And not me, because I don't do that work, but you've got two represented on this panel. So, because you're going to be in trouble. That's called a Ponzi scheme. You can't meet a 20 to 30% investment return that's guaranteed. That's just not possible. And when there's an economic downturn, people suffer liquidity issues, they want their money back, and you don't have it. So the same would be true of coins. You have to conduct due diligence on coins. I hope you can't hear the gardeners just decided to show up. There's 7 days in a week. And of course, there are 168 hours in a week. And they're here just at the moment I'm talking. Not when Joe's talking, but when I'm talking.
We were all wondering what that was, but nobody said anything, you see.
Thank you for not saying anything. So coins have to be looked at. And as long as we're on the subject of coins, unstable coins. You heard me, unstable coins. Because they're called stable coins, but what's the stability based on? It's based on their reserves. Regulators, federal regulators, the Secretary of the Treasury, Janet Yellen, they are really worried about stable coins, particularly US dollar. I'm talking about US dollar stable coins. Why? Well, the recently issued June 8th guidance from the New York Department of Financial Services tells you why. Because they're concerned about a run. This is a banking term when depositors want their money back all at the same time, and the bank can't meet the demands of depositors. That's called insolvency. But of course, issuers of stable coins are not banks. Regulators, and there's some proposals out there, want to see them regulated like banks, federally regulated. But the New York DFS says, well, no, you don't have to be federal regulated. We're going to regulate trust companies that issue coins, but we're going to require you to do a lot of things you may not be doing. One of them is to tell us about your reserves. Where are they? Oh, they're in a bank. Great. Are they an insured deposit bank account? Are they insured by the FDIC? That sounds good. And tell me what happens to the bank. This is the part that the regulators don't like to talk about. What happens to the bank when everybody wants their stable coin to be converted back into fiat at the same time? Because they've heard a rumor either about that stable coin or another one. Again, I'm not naming names. Dan gave me legal advice yesterday not to name names, and he's right. He's an excellent lawyer. And so I'm taking his advice, but you can just read the papers in the last week. If the reserves aren't clear if the reserves are in commercial paper in, say, just as an example, a Chinese real estate company, just to pick up a real example, but I'm not going to name names. Well, how liquid is that investment for the stable coin when you want your fiat back? It's a foreign issuer of commercial paper that is in a foreign currency, foreign to China, US dollars. I mean, in an industry, real estate, that has had its ups and downs everywhere in the world. So where are the reserves held, and who's checking to make sure the reserves are there? The New York DFS, Department of Financial Services, correctly says you have to have an auditor do that. So I haven't seen a case of a stable coin with an auditor. There are auditors giving not opinions, but statements that they've accepted management's view of the reserves. That is not helpful. Is the auditor saying we are verifying the reserves? The answer at the moment is, at least from what I've seen, and anybody on the panel can correct me, or anybody listening, no one's verifying the reserves other than the company. Well, that's useless. So there's a lot to unpack here. I guess that's my initial statement. Marina?
Fully agree, Ross, and that's an excellent point. What I was going to ask you with respect to this guidance by the DFS, which, as you stated, the DFS is one of the toughest regulators, especially in the crypto space. If you're a crypto company and you are offering stable coins, but let's say that you're not in New York, what would you do with this guidance? Like, do you think this is something that, stable coin issuers should be looking at? So even if I'm, let's say, located in, I don't know, an example, Georgia, and I'm not touching New York,
Right.
Should I be considering this? Is this something that I should be implementing, especially the audit component? What are your thoughts on that?
A really good point. Joe made this point earlier about cybersecurity. Even if you're not required to meet the New York DFS standards in cybersecurity, you should take that as the gold standard. I agree with that when it comes to stable coins as well. The New York DFS is actually tougher than the Feds on many, many regulatory issues, including cryptocurrency, including enforcement actions as well in some cases, as BNP Paribas found out when they had an $8.9 billion, yes, it's fiat currency, but it was $8.9 billion fine a few years ago, which was precipitated by New York DFS. So would I advise that they meet the standards of New York DFS? Absolutely. Are they required to at the moment? No. But is any exchange accepting that stable coin as legal tender, so to speak, taking a risk if something goes wrong? Yes, you will be sued. I don't do these cases. I'm not asking for business. I'm hired as an expert witness. That's a lot more fun. And I'm asked, was this reasonable at the time? Well, no. Well, what are the standards? Well, New York DFS has standards. It's not just me. And federal regulators are paranoid, particularly banking regulators, paranoid about MSBs to begin with. Cryptocurrency exchanges are money transmitters, MSBs. Federal banking regulators don't like them, don't like anything about them. So there's already this bias. Is it unfair? Maybe, not completely. So banks pick up on this and start to de-risk. And that's why it's so hard to find a banking partner. I like Joe's idea of having an AML program. I've had clients not in the crypto space with voluntary AML programs. But one thing about MSBs is there are banks that specialize in providing services to MSBs. I'm not talking about crypto MSBs, but MSBs in general. But what's really interesting is that the banks require, at least in one case I'm aware of, an annual independent review by the MSB. In other words, the bank is becoming a kind of super regulator of MSBs. So if you have an AML program, it has 4 pillars. One of them is an independent AML review. That's the one everybody gets wrong. You better have an AML review. Does it have to be every year? Well, good idea, but not more than 18 months. Things change so quickly in the crypto space, you're pushing it at 18 months. I advise clients annual review. If you haven't done one, it's been 2 years. I don't know if you have an AML program. You're missing one of the 4 pillars.
Yeah, no, good. Ross, thank you. That was excellent. I think also some of the importance of this guidance too is just really seeing more and more the issues and the concerns that regulators have with respect to stablecoin. We know that there was a new federal bill that's now being considered, the Loomis-Gillibrand, that also looks at stablecoin as well. And there's concerns in terms of backing of with fiat currency of that stablecoin. There's concerns regarding audits, et cetera. So we're definitely anticipating more supervision and compliance and oversight in this space too. So it's good for companies that are issuing stablecoin or dealing in stablecoins to definitely keep that in mind. Dan, I'll turn it to you now. You obviously are outside counsel to a number of startup companies in this space. How does a company, if you can guide us, how does a startup company deal with outside counsel? At what point should outside counsel be consulted? And is it at the beginning? Should we do it at the end? So your thoughts.
Obviously, you should wait until you're in trouble and the house is on fire. Actually, when this group was talking the other day, Joe said something I really liked. He said, we're usually like the second call people make right after they call their mother and their lawyer. And I appreciate that. However, you'd be shocked at how often outside counsel doesn't get called until a regulator has already contacted the company. And this is going to go back to something that Joe was hitting on, which I would also like to hammer the poor dead horse. Like Joe said, good compliance is good business, right? I think, a phrase I like to use is culture of compliance. It, comes from, there's tons of FTC literature about culture of compliance, right? The regulators are not just looking at whether or not you have an AML policy in place or whether or not you meet the minimum required obligations, but they want to see if you're really doing it, if you really get it, right? If it's in the fabric of your company. And that comes with, especially in the fintech startup space, that doesn't usually come from the engineers who came up with the great idea that you're trying to bring to market, right? This is something that you're going to get from consultants and attorneys. And so first call, after you call your mom, call your lawyer. If you don't have a lawyer, do some research and find one. If you don't like it, shop around. I mean, I get it. I get that not every lawyer fits your budget. Although I can comment on that real quickly also to say that don't be shy about the fact that if you're a startup, you have a very limited budget and you didn't originally plan maybe on hiring a lawyer early on. Talk through, figure out what your needs are. And you're probably going to have a couple conversations with people like us on this panel to figure out what your legal needs are. What are the things you need to address so that you can walk before you run? Because also something Joe said earlier, you can take time to build out your compliance program now on your timetable or later on the regulator's timetable, which is a lot less pleasant, right? There's an old proverb that if you don't make time for your health now, you will be forced to make time for your illness later. It's the same thing with compliance and enforcement. If you don't take it seriously now, build a culture of compliance from the leadership of the company on down. It will eventually cause you great heartburn.
Yep, no, absolutely. And so I guess in light of that, what do you think, and I think you've kind of covered it, but what do you think a new company, a startup company should have in mind before it gets any of its products out to the market?
So in the fintech space, I mean, the first thing, one of the first conversations or first parts of the first conversations I always have with new fintech clients who maybe aren't as familiar with this regulatory space is that you have to understand all of the MSB regulations, everything that we're, the five of us here on this call deal with are offshoots of banking regulation, right? And banks have been regulated like this for 150 years, and there are very good reasons for it. And it's not just to make your life harder. There is, safety and soundness is a phrase that keeps getting repeated, right? And the reason for that phrase, it comes from originally the FDIC Act. Well, probably even older than that, but that's, in any case, the idea is people need to be able to rely on the institutions giving them financial institutions. So there's both the money laundering thing we're trying to solve for and consumer protection, and just generally the fact that, like, I want to be able to know that I can go down to the corner, go to the 7-Eleven, give my money to a Western Union rep and have it delivered to my, relative in Peru, or whatever. So the regulations aren't going anywhere. They're only going to get tougher. So that's like the first thing we've got to talk about. You are effectively a bank. If you're an MSB, you are a mini bank. That's why the regulations are so heavy. So that sort of framing and context is usually where I start. And then everything else kind of comes from there. You have to think about your product. What is your intended best product? And what pieces of it are flexible so that we can have very real conversations about rolling it out in a way that fits the regulatory framework. Maybe in your case, it's rolling out to 1 or 2 states, or maybe it's rolling it out with 2 of the 4 functions that you had in mind while you get your feet under you. There's a lot of general business advice that comes out in the conversations with people like Joe and Marina and Ross and myself that, you're going to have to be a little bit flexible to find your best case scenario. 5 years from now, maybe you'll be PayPal and you'll have licenses in all 50 states. But, in the beginning, you need to be a little bit flexible. You need to have an idea of where you're going with your product, but what parts you're willing to sort of phase in later. And everything was with an eye toward the compliance of culture, or culture of compliance, excuse me.
Right. And how about in terms of ongoing compliance issues? What do you think a company should consider?
Sure. So in specific practical terms, have a really good compliance officer, which is probably your second biggest problem after finding a bank, right? After Joe helps you find a bank, you now need to ask him to help you find a chief compliance officer. There are more seats than bodies, so to speak, in the industry right now. So this is a very real issue. And not for nothing, but then if you find a good one, keep them. Keep him or her happy. Treat them well.
Dan, let me just add a small point to that, which is I agree with everything you say. Hire them, make sure they're all happy, but also listen to them. They know more than you do about this stuff. Dan?
Yeah, absolutely.
If I can just jump in, and it looks like we have a question. Do you want to read it? I'm just not seeing the question. Apologize. Anna?
I can read it. Great advice on building a program and finding outside counsel. I will add an anecdote to Dan's proverb.
Okay.
Quote, when did Noah build the ark? answer, before the flood, and therein lies the difference.
Yeah, that's a great point. Right?
Before the flood.
was deep.
It's the only way to survive, right? I mean, you just don't want to be building your compliance program when enforcement, you're in the middle of an enforcement action. Absolutely, absolutely.
I have to think about that one, but yes, that's profound.
Yeah, yeah. No, it's right on point, right on point. Dan, sorry, and any other issues, compliance concerns?
So, you know, where I would go from there, like I said, start with the compliance officer. And here is, I've had too many clients where they started small and then they grew fast. And the person who was the COO is also their compliance person. And that's not a good fit. That's not, this again is culture of compliance stuff. Find someone who knows what they're doing, give them the authority to get stuff done, listen to them when they tell you things. Don't get offended or upset when, you know, they tell you, no, you can't do this thing you really, really want to do. So it kind of starts there. And then everything else is all about, you know, Ross mentioned your annual review. Get an independent review of your AML program. I definitely recommend annually. I don't necessarily recommend more often than annually, but I would only push to 18 months if like there's a good business reason why. Try and stick to annually, get an independent reviewer who is pretty well qualified. Don't just use your cousin Bob just because they're independent, right? And this should go without saying, but if you have a policy, do it. Like, don't just have something on paper that says, oh, we do X, Y, and Z. We monitor transactions for this or that, and then expect that that's going to satisfy an examiner. You need to actually be doing the things you say you're doing. So not just an independent review, but periodically internally review your various policies, procedures, and controls, and make sure that they reflect what you're actually doing. And if they don't, figure out where the gap is, and then either you need to adjust your policy or adjust your practices.
Well, that's a great point, and that's something that we definitely discuss with our clients as well, because the policy can look great, but if it's not being implemented, then you know, you have a huge gap right there. So it's definitely critical. Well, thank you all for your time and your insight. This was excellent. I don't see.
We have a question for Joe.
We have a question.
We have a question for Joe.
Questions for Joe. Let's see. Okay. Banking relationships are not easy to come by for crypto companies. Absolutely right. What must crypto companies, both big and small, do in order to obtain sustainable banking relationships? Joe?
Apologize, I was on mute there for a moment. Yeah, we talked about this earlier, how difficult it is to find a banking relationship. And I think the key in that question that I see is sustainable. So, you know, too often, and this kind of goes back to the early days of crypto, and I hope it is no longer the case, but there are a lot of companies that just would sort of, hey, I'll just open a bank account, and as soon as they throw me out, I'll go find another bank, and they'll sort of hop around. You know, that's no way to live, right? Because, you know, inevitably you will be shut down, and it's usually, you know, Murphy's Law, it's usually right when you need, you know, some sort of check to clear or transactions in progress, or, you know, you just can't run a business, whatever that business is, without a bank account. So the key to that sustainability is engaging, as I mentioned earlier, these banks early on, having the conversation, really getting to know what's important to them, what are the requirements, and not just doing the bare minimum, but if you have and are in a place where you're doing even more mitigating controls, volunteer that, you know, let them know who you are. And in some cases, we've talked to some bankers at Bank Crypto, and they look at what is that person's background. You know, do they previously own a business? Were they in another regulated industry, whether or not that's banking or some other industry where they have a background where they understand the implications of being regulated by a government agency or two or three, and really use that to your advantage and have those conversations early on, And the key to sustaining that bank relationship is open and direct communication. The bank asks you a question, yes, sir, yes, ma'am, provide that information. If they give you 2 days, deliver it in 1 day. Continue to have those engagements. And I'm not saying the banks are looking for an excuse to throw you out, but understand these banks have a line around the block and down the street of companies just itching to get a bank account. So if you have one, it really is yours to lose. And Ross mentioned something earlier, and I think it's really important. It seems to us that some of the crypto-friendly banks or banking crypto companies are really asking for more than regulatory requirements. So one bank that's crypto-friendly that I can think of, they require that you have a signed engagement and are working with a blockchain forensics company. And they don't care if you have one Bitcoin ATM machine or you're one of the largest exchanges in the world. They not only want to see that you have a signed engagement, you're working with blockchain forensics, they want to see how you're using it, and they may even prescribe certain elements of that use of software that you have in the background, certain limits or certain alerts that you have in place, for different levels of risk. So, it's really important to understand. Again, the banks may be asking for a little bit more, and you have to be prepared to jump. When they say jump.
I'd like to also add, by the way, all of that is fantastic advice, but I'd also like to add that understand that a lot of the bank resistance to banking MSBs and especially crypto, Ross alluded to this earlier, they get pressure from their regulators. And then it just becomes a risk to them to have customers who are risky, right? So basically, do your best to not be a risky customer. And there are a lot of ways that you can present that profile. One of them is if you're a regulated entity yourself, if you're licensed, make sure that your compliance program is, completely buttoned up. If your state examinations are coming back with really good ratings, you can usually share those with your bank and tell them, look, we're rated 1, we're rated 2. It eases the risk. The bank periodically is doing their own risk analysis on all their customers. So it just gives you better chances of staying with them.
Thank you. We just got a quick follow-up question on this banking topic, so I'll jump on that one, and then Gary, Clement, I'll jump to your question as well. So it says, in my experience, after receiving a negative response from a bank, it has been impossible to get a possible second review, even months later. Is this common?
Oops, I don't know I can speak to whether or not it's common, but it would seem to me that, it comes down to making that first impression. So if you're approaching a bank and you have an AML program that you copied and pasted from the internet, or you sort of spun up yourself, I'm all for DIY projects around the house, but I don't know that you want to do it with your AML program. Maybe a little biased in that, but coming to the table with, again, your I don't say best and final, but your best foot forward. If you have that negative first impression, it's quite possible the bank could effectively blacklist you and say, hey, we're just not going to do business because this particular company that approached us, it looks like they just don't take AML seriously. They're just excited to go to the market, and they thought they could send something in and that we would check the box, and we're not going to do that as a bank because, as Dan mentioned, we have to answer to our regulators who are asking some very detailed and very intricate textual questions about our business, and we're not about to put our bank at risk. So yeah, it would not surprise me that some of the banks sort of look at those applications and they kind of weed out, who are the pretenders, and they may even put that in their hot file or blacklist. Banks who use different names, but whatever the case, and just say, hey, we're not going to even entertain a future application because we're not sure that it's coming from a place of genuine AML compliance and risk management concern. Because of that first impression, it sort of smells of, hey, we just want a bank account, and so now we're giving you what we think you want, as opposed to coming, hat in hand to the door. Here's our AML program. We're surrounding ourselves with great compliance, consultants or teams, or our compliance officer is top notch. Here's his or her CV. These are the controls and these are the expectations we have for our employees. And the bank's like, whoa, this is great AML information. Let's have a conversation. It's a completely different conversation.
And Ross, you had some thoughts on this as well? You're on mute, by the way.
Yeah, I think Joe has said it all, but I do see surprisingly weak AML programs in this space. They're trying to skate by. They've taken, I mean, they'll copy somebody else's program, but forget to change the defined terms. So it's clear that they've copied a program, say, outside the crypto space. You can't save money like that. It's obvious that the program is weak. Asking a question up to continue Dan's point about compliance officers, you can figure out if the compliance officer is qualified just by looking at his or her resume. That takes about 5 seconds. Are they CAMS or CFE or ACFCS certified? Those certifications are very useful. Have they had any prior experience? Are they just out of school, or have they worked in the field? Do they know crypto? So you got to have that nailed down before you go to a bank. They're going to be able to figure that out. I had a recent experience with this is a non-crypto, non-regulated client whose bank wanted to talk to them about compliance. And since I had drafted the voluntary program, they called me in, and they had their AML compliance officer, the bank did, on the line asking due diligence type questions of my client. So this is really serious and really detailed questions. You have to be prepared for that. You have to be able to answer those questions.
Yeah, definitely, and fully.
I have 2 cents to add real quick. I know we're already over, but I'd just also say it depends a little bit also on what the negative response was. And if you don't get any specifics, ask for specifics, right? Sometimes it's that the bank is just like, we don't bank crypto, and like, you can't do anything with that. So you just don't waste your energy, right? But they might tell you, well, we weren't that comfortable with X, Y, or Z part of your, business model. Then, you might be able to leave that conversation with an open door to come back after, maybe you've made adjustments, for instance.
Thank you, Dan. And I'll see if we can just quickly get thoughts on Gary's questions, which is, what are your thoughts on digital deposit receipts tied to a set currency and managed by a bank? So I think we're looking at, what are your thoughts on stablecoin managed by a bank? Any first impressions? Ross, I think you may have some.
Gosh, I mean, Gary is Gary 2 R's, I call him, because he spells his first name with 2 R's. He's Canadian, and yes, one of the first DDRs, digital deposit receipts, was issued in Canadian dollars. I don't know a lot about it, except I don't see the use case for it. These are not stable coins, but they're touted as a replacement for stable coins, but more stable. Stable coins are used to buy other crypto. I'm not sure how an investment in a digital deposit receipt is going to lead to a purchase of crypto, or what other use it has. So I have to pass on this one.
Okay. Joe or Dan, any final thoughts? I know we had discussed 3 tips. Do you want to do like a quick 3-tip summary for our audience here today?
Sure. Yeah, I can just do a couple of tips, sort of off the top of my head here. I mean, I think number 1, do your homework, right? Do your research. Come to the table knowing as much as you can about AML and compliance. We're not asking you to pretend to be a lawyer or pretend to be a compliance expert, but really do your homework. And what we've found with clients that approach us, and as Dan sort of joked about earlier, maybe the second or third call they make is to our office. We've really noticed more and more of these entrepreneurs of these startups. They're coming really well read on AML topics, not just in crypto, but AML in general, and they know some of the basic sort of core concepts of AML. And let me tell you, that just speeds things up. It makes things a lot more efficient, and they really get the most out of that meeting. And I know that similar things have been said about the legal space. Hey, if you're going to work with an attorney, do your homework, have your questions prepared. Come to the table having done your homework. That's really going to get you your best bang for the buck. And it's really not just money savings, but it's also going to get the most value in terms of what you're going to learn from that conversation. A couple other tips was mentioned before, and I'd love to reinforce it here. Grow compliance as you grow your business, right? It may not necessarily be one-to-one, and there may not be this fancy mathematical formula, but as you grow your business, continue to invest in compliance, not just AML, consumer protection, cybersecurity, and other areas, and have that grow with your institution, have that be realistic. And as Ross mentioned, the regulators are going to look at that. If they see sales growth and customers going like this, and the compliance, infrastructure is going like that, that's a big delta, and you're going to get a lot of questions associated with that. So make sure you're on point with that. And again, I'll sort of close with my bumper sticker. Good compliance is indeed good business, and start from day one. Begin with the assumption that much is expected of you in terms of compliance, regardless of what bucket you fit in or don't fit in terms of regulatory oversight. And begin with that concept, and surround yourself with great people, folks that really set a tone for a culture of compliance, and use that as part of your ethos as you grow your company and expand into or expand within crypto.
Thank you, Joe. Ross?
Sure, 3 quick things. Sweat the details, and one of the details is counterparties and coins. Other crypto exchanges, you need to conduct due diligence. Coins, you need to conduct due diligence. Obviously not on Bitcoin, which is 70% of the market, but a coin you've never heard of. I don't want to make up a name, because there probably is a coin like that, but because everybody's always making up names with coins. You want to make sure it's real, that it's not a pump and dump scheme issued by 2 people in their basement. It's always the basement. I'm not sure why. Second is unstable coins. So yes, you want to make sure that you do a negative news search on the stable coin, and you see what's written. There are volumes written on certain stable coins. The ones in particular I'm thinking of that don't have really clearly definable reserves. And the third is, what's the third? Stable coins, exchanges, where the counterparties might be exchanges, but where are they located? They don't have a physical location, that's fine. What is their home jurisdiction? Oh, they don't have a home jurisdiction. Wait a minute. What does that mean? So no one's regulating them. They're moving from jurisdictions because the jurisdiction is imposing greater controls. Not a good sign. So do those negative news searches on both coins and exchanges. And the big vendors, CipherTrace comes to mind, have ratings of exchanges, green, yellow, red. Take those seriously. Those are my 3 points.
Thank you, Ross. Dan?
Yeah, so I had 3 in mind, and I ended up basically talking them all out in the course of the panel. So in an effort to not be repetitive, I'll just add 2 really quick things at the end here. One, and this is sort of my general kind of advice to any fintech startup. It's not compliance or legal specific, which is know what pain you are relieving, right? Every good product that lasts is relieving some pain that someone is feeling somewhere, right? What problem are you solving? If you don't know what that is, you don't really have a product yet. So don't rush to market, right? If you're just getting into this because NFTs are hot and I want to make NFTs, it's not going to work out. And then my compliance advice, in keeping with the themes of everything we've been saying, educate management of your company. Don't structure things so that your chief compliance officer is the only one who knows anything about compliance, right? I think it's very good for at least the basic ideas to be understood by your C-level execs. It solves a lot of problems in the future. It smooths over friction when your compliance officer is telling you have to do something. So just start the education early and often.
Excellent. Thank you. Well, I know we're over time. I want to thank our panelists. Great job. This was excellent. Great insight. Anna, I don't know if there's anything additional that you need to cover. Otherwise, thank you, everyone. And Anna, I'll turn it to you.
Thank you, Marina. Well, you said it perfectly. It was a great panel. We went over the time because the conversation was very good. So I also thank everyone. Daniel Wood from Pillsbury, Joseph Ciccolo from BitAML, and then Ross Delston from Law Office of Ross Delston. Thank you for your moderation in conducting this great conversation, Marina. We are very grateful for the opportunity we had to learn from everyone. And I only want to take the opportunity, couple of seconds, to invite everyone to the series of virtual roundtables that we're going to start next month, July 20th. We're going to all see each other virtually, but we're going to join the Setting Your Crypto MSB. So those, we're going to cover the to-dos and also the not to-dos in compliance challenges. Joining us in that panel, we're going to have the great, yes, Mr. Joseph Ciccolo is going to join us one more time. Mr. Joseph Lapadula from Crypto.com is going to be there, and we're going to have Jennifer Crowder from K&L Gates as well. I look forward to seeing you. Thank you one more time to our panelists and our moderator. We're going to look forward to seeing all of you in our next virtual roundtable. Thank you, everyone, and I'll see you in the next roundtable virtually.
Thanks very much.
Thank
you.
you.
Thank
Great
you,
job,
everyone.
everyone.
Thank you.